Welcome everybody to Street Smart Investing. I'm Albert, and here's the list of the rest of the companies. I got tired to upload it yesterday, so I'm uploading it today. Today is July 15th, Thursday, the year 2020. And what can I say? I mean, a lot of good companies on this list. So let me throw off a disclaimer. If you're going to invest in the stock market, please consult an investment advisor. This information is for reference and learning purposes only. If you're going to invest in the stock market, speak to a licensed one, and that's pretty much it. So let's begin. Again, when I check these, it's only on the watch list. So I'm not recommending to buy or sell anything, just recommending stuff on a watch list. So let's begin on the first one. The first one is Cpsi at $24.43. Market cap is $354 million. Earnings per share is $1.47. PE is at 15, which is a fair value. Debt is at 43%, 0.6. Cash flows at 1.6 million. So you can see I checked that one, and that one is a good watch list pick. Next one is PHG, $50.51. Market cap is 45.93 billion. Earnings per share is 1.24. PE ratio is 37. Pretty high. It's actually double the PE ratios I normally look for. So I would say just wait for a price drop in that to really get a good value off of that. Debt is at 53%, not bad. The cash flow needs work. It's at negative 276 million. So even though if this was watch listed, this should be like at the bottom of your list just because of the cash flow. And again, we're already like half of the year through, so hopefully they manage their money better. And then I think I'll do a video at the end of the year, or maybe in a few weeks, I don't know. But I want to do a video where definitely by the end of the year I'll do it, that I summarize everything that I watch listed, and then from the watch list I'll actually eliminate those that actually did good throughout the year and see where they are at that point in time. So hopefully they do better than expectations. Next up is Itgr at $71.99, just shy of $72 to be exact. Market cap is at 2.36 billion. Earnings per share is at $3.05. PE is slightly high at 23. Debt is at 51.45%. Cash flow is at negative 12. This one is pretty good too for a watch list. If you notice, again, like I said, the PE ratio is kind of high, so you want to wait for a drop in that price to go around the 15 PE mark. I can't tell you a price it will be when it hits the PE ratio for 15. Because based on the shares and volume and everything that I've been explaining in all my videos, it's kind of hard to calculate the price. I mean, I can give an estimation, but still, you just pretty much you follow the PE. That's the whole point of watching these categories and the numbers. And one more thing with the PE and the earnings per share. Again, the earnings per share, again, that means what the company is earning. That means what they're earning for the year, not the quarter. It's for the whole year. and then the PE changes every quarter or every few days or weeks or whatever, based on, supply and demand, which means if people are buying and selling that stock. So it changes. It varies every week at least. I don't know about every day. I don't check the same stock every day. That's why I check so many stocks. But yeah, it varies week to week. And so with that said, again, earnings per share is how much they earn. PE means if you're getting a fair value for the company. So that's the difference, because I know people, forget and stuff. So again, a normal value or undervalued is 15 PE or below. The minimum you want to get is around 10. Anything less than 10 PE, now it's like, is the company doing any better? It should range between 10 and 15. It shouldn't go below 10. Around below 10 is like, now it's getting kind of scary. So next up is ABMD. I checked that one, and that one is watch listed. Let me zoom in a little more. Move a little camera. Sorry. It's at 276. It's pretty expensive. Whoa. 276 and 64 cents. Market cap is at 12 and 46 billion. Earnings per share is at 4 and 42. PE is at 57. Pretty damn high. Way too high. The reason I really like this company is the debt level. It's hard to find, especially nowadays, what's going on. It's really hard to find a debt lower than 20%. And the debt load on this is 12.4%. And the cash flow is insane. They have 70 million in cash flow. So this company is pretty expensive, but they might do good things. Also, I didn't mention if they were paying a dividend, but I guess I'll summarize that at the end of the year, see if they're paying a dividend, and then again, I'll do a process of elimination, and then the next videos I'll start actually recommending if they're actually good for fundamentals or technicals, because that's been changing ever since the pandemic in March. And it seems that technicals are on the rise and fundamentals are just out the window. Fundamentals are just not working for a lot of companies nowadays. So next up is Ctso at $10.68. Market cap is 386.95. You can round it off to 387 mil. Earnings per share is at negative. They're not even earning anything. Negative 54. Well, 54. Negative 0.54. Sorry. PE is at negative 18. Debt is at 52, slightly high. I want to see it around 40 or less. Cash flow is at negative 10 mil. Awful. Next up is WAT at $220.80. Market cap is at 13.67 billion. Earnings per share is at 8.13. PE ratio is at 22.15. Debt is sky high. This looks like a bankrupt company to me. The debt is at 112%, 0.8 to be exact. The cash flow is awful, negative 460 million. So I just don't see how this company is going to make money, even unless they do a split. Which would mean, the split would mean they kind of cut the shares into, it depends on the ratio, because they could do a ratio of 2-1, 3-1, 4-1, and then depending on the split ratio is how the shares will be divided and how everything's going to be divided. So if they do a split, then the company shares, the share price will drop tremendously. And then, the numbers will be a little wacky. And then they'll see if they can still earn on that. Next up is DHR, Danaher. They're very, very, very strong. They're a really good company. It's pretty sky high, but the numbers are really good, just like ABMD, as I mentioned a little earlier. They're at $188.34. They do offer a dividend, but I didn't write it down. But again, I'll summarize that in another video. Market cap is at 133 billion. So this is a insane amount of money. They're a huge company. They're bigger than ABMD, and that's the funny thing. The market cap is much higher, but they're cheaper. And then the market cap is much lower for ABMD, but the price is higher. It's weird. That has to do with the shares and value of the company, and just the numbers that are put in total. So yeah, the earnings per share for DHR is 3.62. PE ratio is at 48. Debt is at 55%. Cash flow is at 19 billion. Last up is AXDX, $17.71. Market cap is at 978 million. Earnings per share is at negative 1.53. PE ratio is at negative 11. The debt is at 119. That looks like a bankrupt company to me. And cash flow is negative 5 million. Yeah, those are all signs for not working out. So thanks for watching, and I will do another video.